Welcome everyone to today's webinar. I'm Josh, and thanks very much, Ross, for having us. I'm talking to you from Empowered, as you can probably see on the screen. I'm here to talk you through how to ensure your business is optimizing its R&D tax claim. It's great to be speaking to the TLA community today. I'm sure Russ will not remember, but back in about 2016, a younger, slimmer version of myself in his first sort of 2 or 3 months in fintech attended a TLA event and very briefly spoke to Russ. So it's good to be back here speaking to you guys.
Thanks for reminding me, Josh. Good to see you. And actually, I need to make sure I've got your details. So you're still in our community. So great to see you.
Fantastic. Right. So yeah, today we're going to be going over obviously introductions. Going to be talking you through a light introduction to the scheme, how to take advantage of the scheme, how to use it to drive your business growth, and I'll also go into some recent scheme changes which could affect your claim, and finally how to choose the right kind of advisor for you, and then I think we're ending with a Q&A. To sort of introduce myself a bit more formally, I'm a senior business development manager at Empowered. So my day-to-day at the moment is speaking with businesses and partners about the R&D tax scheme, how Empowered's unique approach works, and also how to use it to help maximize your business or your client's use of the R&D scheme while minimizing time and expense. A little bit on who we are here at Empowered. So we are a specialist R&D advisory company. We were the first to completely merge technology into the R&D claim process. So I sort of like to tell my clients that we're sort of midway between advisory, almost a little bit of a SaaS business. That's not an official line, but that's what I sometimes like to describe us as. We've processed over 800 claims. We've worked with we've processed over 1,800 claims. We've worked with over 800 companies with a 100% success rate. We've never had a claim reduced by HMRC. And we believe that we're really well placed to give advice on the scheme more generally, as we also sit on HMRC's R&D Consultative Committee and the HMRC's R&D Advisory Board. We were picked by the Chartered Institute of Taxation and HMRC as one of 4 companies to build industry best practice on how to submit claims. So as a result, if any of you have been involved in an R&D claim process, if you have any feedback about the service, the claim, if you have anything you want to feedback to HMRC, feel free to send that through to us, send it through to myself afterwards, and we'd be more happy to pass that on. We work very closely with HMRC, so and they're always very keen to sort of hear feedback in that regard. To best understand the benefits of R&D tax credits, it's important to understand where it sits within the wider funding ecosystem. Obviously, most businesses will start with a combination of those 3 on the right of your screen. So either sort of debt finance, crowdfunding, or sort of investment, whether that's sort of angel investment, seed investment sort of thing. And we also know that around half of businesses will fall within their initial 5 years of trading. So it's crucial to use everything at your disposal, especially if you're an early stage business, to extend your runway as far as possible. And the R&D scheme is there to definitely help you do that if you're a business that is working on innovative projects and engaged in R&D. There's a real focus from the UK government on R&D. The reason being that there's quite a big multiplier effect on R&D spend within the UK economy. The government set quite high targets for adoption of the scheme within the UK, but at the moment uptake is too low. So about 2.4%. They'll miss the target of about 2.4% of UK GDP by 2027 as things are going at the moment. And yeah, obviously today's focus is on R&D tax credits, but I'm happy to help out if you're interested in anything else there, especially on the grant side, because that is married quite closely to R&D. And whether or not we're able to help you directly, we're more than happy to make introductions to other partners, etc., who may be able to point out. So just feel free to reach out post webinar. So yeah, about the scheme. So as I mentioned, the UK government wants R&D expenditure to reach 2.4% of UK GDP by 2027. There's a longer term goal of about 3%. They're currently sat at somewhere between 1.8 and 1.9%. So the government is obviously trying to incentivize people to uptake on this. And actually, while there have been some recent changes that have tried to address potential abuse of the scheme, a lot of what the government have done or HMRC have done over the last sort of 2 decades since the scheme was born has been ways to make it more attractive and to increase uptake. The scheme at the moment lets you claim back up to 33% of R&D spend as either cash if you're a loss-making company or corporation tax credits if you're a profitable business. This can be claimed back every year after your year end, and you can claim back for about 2 previous periods at the same time. Startups for the definition of startups for the concepts of this scheme are defined as a business with less than 500 staff, less than £100 million in turnover, less than 86 million euros in gross assets. 88% of all claims at the moment are submitted by SMEs, and every year 10% of claims are by brand new firms who've never claimed before. Only around 40% of companies that are eligible claim for this. So it's, there's a lot of businesses up and down the country that are leaving quite a lot of cash on the table that the government has sat there and wants them to take advantage of. If you are profitable, you're only able to pull back about 26% as a max, rather than 33%. But as you can imagine, if you're a profitable business, a scalable business that's spending a significant amount on R&D, 26% back is still, a really, really good amount, and it's worthwhile, looking into it and seeing whether that's something that you can take advantage of. So yeah, I mean, if there's anyone there on the webinar today that's not claiming, you're probably wondering now, how do I get my hands on this? It's in order to be eligible for the scheme, you have to demonstrate that you've worked on projects that qualify as research and development. So the 3 main criteria up there, as you can see, a high level of uncertainty. So there has to be some kind of technological uncertainty that had to be overcome. Sometimes I think HMRC described this as effectively you couldn't have gone into a project knowing exactly what it was that was going to need to be done to sort of achieve the outcome that you were looking for. There has to have been some uncertainty in there. It also needs to be in some way or another driving technological or scientific advance. So the point is here, there needs to be something that can't be easily replicated in your field. So, I think I'm still, after my GCSE and DT, I think I'm still a bit of a dab hand with woodwork. I could probably build a table, but, I think probably anyone could do it to the same kind of level, which sort of brings us on to the next point, which is it requires experienced professionals. That my GCSE and DT from probably almost 15 years ago now doesn't necessarily mean that anything that I do at a company regarding construction of a piece of furniture would fill these criteria. You're talking about a skilled craftsman, you're talking about a scientist, an engineer. It could just be experience. You could have just worked in a sector for a very, very long time. You could have built up a lot of experience, and that could tick that box for HMRC as well. The nuances between those can be quite broad. So it's one of the areas where it can actually be quite advantageous to speak to an advisor. I spoke to a company that produces augmented reality systems for children that are going into hospital to have surgery, to mentally prepare them for going to the hospital. They were building what they were building was actually just UX and UI. They were building accessibility on the app, and normally under HMRC schemes that doesn't qualify. However, they were building it so that blind and deaf children could use their app. And so in actual fact, something with that level of complexity, it is difficult to replicate. It is a technological advance, and there is a high degree of uncertainty in that. So that would still come under it. Once you have identified what an eligible project is, you need to understand which costs within that project you can claim back. So those core costs are staff, subcontractors, and consumables. These costs are only reclaimable based on the percentage relevance to R&D. So, if you're hiring an engineer at £100,000 per year, he may only spend 80% of his time on R&D project. 20% may be on regular day-to-day activities. It may be, making amendments or just mending things that couldn't be claimed back on. So, you'd be able to claim back 80%, so that'd be £80,000. and up to 33% would be reclaimed. With subcontractors, it works a similar way, but they're capped at 65% for qualifying expenditures. So if you've brought on an external engineer that's working for you as a subcontractor and they're on £100,000, for the purpose of the scheme, they're effectively on £65,000. So it's a lot more advantageous for the purpose of the scheme. It's a lot more advantageous to have actual internal staff. And consumables, which is something people often forget about. People can claim back for an awful lot of different consumables if you've had to use it, if you can demonstrate that you've had to use it in the process of completing R&D. I've seen people claim back for things like Slack and stuff like that before, because they've been able to make an argument that, I only needed this to collaborate with my external engineers to work on R&D projects. So, you can potentially claim back a percentage on that. There are also indirect costs, so that you could be a project manager or a director at a business. You're involved in the overall process. You're helping to direct people. You're helping to organize things. And as long as that's relevant to the R&D projects that have been worked on, that is also claimable. Again, it's all about evidencing it for HMRC. There could be improvement costs, production costs, indirect support costs, any of those. However, things that are too far removed to qualify, like sales, marketing, etc., those can't be claimed back. And it's an issue that we sometimes see, especially with smaller businesses, because we'll sometimes speak to a business and their sales director will be spending 20% of his time on R&D, and it on paper that looks strange to HMRC. Why is a sales professional doing any R&D? They shouldn't be. But in a smaller company, of course, that can happen. So again, it's all about evidencing it correctly in the actual claim. The consultation that they did on the R&D claim scheme in 2020 actually also modernized a little bit and included data and hosting costs. So that's something to bear in mind, that you can now claim back on that as well. It's obviously a very recent change, but yeah, people should be aware of it. And any advisor that you're speaking to should definitely be aware of it. If they're not, they're probably not doing a fantastic job for you. But yeah, this is, as I was sort of mentioning, this is kind of where where the nuance is, and where using a specialist becomes quite important. If you're failing to adhere to the scheme, and if you're claiming back more than you should, there's a prospect of an inquiry from HMRC, and that can be very time-consuming and costly, and potentially delay payment from HMRC. And it often requires staff to give up time to HMRC to answer questions. And actually, for us, we've never had to deal with that, and something we actively try and avoid. We submit top quality claims. If we did have a claim queried, we include claim protection in our Pricing It Empowered, and it's something that we want to avoid like the plague. It takes a lot of time up. I've actually spoken to, in the last few months, I've spoken to multiple businesses, one of which was a recent unicorn in the insurance space, and they used to self-file, and HMRC are stepping up what they're doing to look into these things. They were left in a position where suddenly HMRC said to them, you need to go and get a specialist in, because you don't have the capability to write a claim of this size and complexity in-house anymore. They had to go and speak to one of the big 4 or big 6, and next thing you know, they're paying out an obscene amount of money per hour to speak for someone to explain to them how to rewrite their claim. It's better to just be prepared for these things from the outset, rather than having to go back and sort of change retrospectively. Next up, it's great to save time and optimize your claim by outsourcing it, but it's also important that you understand what's going on with these claims. It's something that we're really passionate about here. We actually provide a lot of education materials and a knowledge center within our platform for all of our clients, and for larger clients, we even provide bespoke training for staff who are involved in compiling the claim, because that all helps to maximize the claim at the end of the day. But first and foremost, you have to complete a claim report for that financial year. So this can't be submitted until your accounts are finalized, but what people often do is prep it beforehand to make sure that when those accounts go in, you can submit it straight away and make sure the cash is with you as soon as possible. This report is comprised of a cost collection, so identifying all that stuff we were talking about before, your staff costs, external costs, consumables costs, and then you're providing percentages for what percent of these costs were related to R&D, and obviously explaining why those percentages are where they're at. That's all combined to give you an overall figure. The second part is the technical narrative. This is where you're justifying your expenses and which projects and challenges you're involved in your R&D spend for that year. So once both halves are finalized, they're combined and they're sent over to HMRC along with your CT 600 tax computation form. A specialist or accountant can submit on your behalf, or you can submit it yourself. And normally the claim is processed within about 28 days. Again, if you get inquired, that delay could take up to about 6 months. So make sure you are obviously aware of that. As I mentioned, we sort of include inquiry support, but assuming the claim is successful, which I hope they would be, and if you put it through us, we're pretty certain it would be. But assuming the claim is deemed successful, you receive that benefit as cash if loss making or corporation tax if profit making, as I mentioned. The issue with this, and this is really the crux of the actual R&D claim here. The fundamental problem you see here is that on the one hand, HMRC want a massive volume of evidence for all the claims they process, especially as you get larger and larger and larger. But you as a company putting this stuff together, you want to spend as little time as possible, understandably. The R&D claim, it's a boring aspect of life as a business, but those two things are fundamentally opposed to one another. And actually, what advisors are trying to do is kind of bridge that gap. I mean, most advisors are trying to fix this to a certain extent, but they will speak with a member of staff. They might speak to your CTO, they might speak to your COO, and they'll hope that person can sort of aggregate the entire business activities for that last year. And obviously, if you're the CTO or COO of a business, of course, you can articulate sort of what you've worked on. What we think, though, is that it's better to sort of get into more granular detail. And actually, it's bound to produce a higher quality claim, but it's also bound to actually unlock or optimize what you can claim back on that particular claim. You have to be able to evidence what you're claiming back from HMRC. Sometimes a couple of phone calls with senior staff might not be enough to do that. So we sort of given you an understanding of what the scheme is, how to claim. It's important to know that there are changes coming. And the reason that there have been changes and changes are ongoing is that last year there was an audit of HMRC's accounts, and Gareth Davies, who's their chief auditor, decided that there were not adequate risk screening measures for the scheme. So a few things were looked into, and just to give you guys a bit of a timeline of sort of what that looked like. It's best, and this is a bit of surmise. The entire history of the R&D tax scheme sort of in front of us here, but as the timeline shows, most of the changes were historically to actually increase uptake. So aside from from 2008, where they reduced the historic claim periods you claim for from 6 years back down to 2, which I think was probably put in place because if HMRC were getting 7 years worth of R&D claims at the end of year from every company, I think they don't have the manpower to do that. But everything else, pretty much up until the last few years, has been to expand the claim. The SME credit was increased in 2015, the PAYE and NIC cap was removed in 2012. And the RDEC incentive was introduced in 2013, which actually added a cash incentive for larger companies to file R&D claims, whereas before it was just a reduction on tax. However, recent changes have been to reduce abuse of the scheme by and large, so and increase quality of claims in the scheme. Also, Rishi Sunak in the budget this year announced that the PAYE and national insurance cap was returning to the scheme. Which obviously has implications for a lot of businesses, especially if you're employing a lot of external staff, subcontractors rather. So a big reason for the changes coming out of the 22 audit lie in the changes to the R&D claim ecosystem. More advisors have entered the scheme or into the space over the last in the last 10 years. Some of which have some quite questionable approaches to claiming and can probably be slightly over-aggressive. I won't go into much detail of it, but you hear about it all the time in the industry. People getting called up, they're running shops, they're running butchers or something like that, and they're getting phone calls from someone out of the blue saying, we reckon you can, you're owed about £5,000 from the government, and they're saying fantastic, and some of them get through. HMRC can't check every single claim that goes through, but some of them get caught, and what ends up happening is that HMRC will sometimes focus on a specific industry if they think that abuse is quite high. Last year, I think it was the dental industry came under increased scrutiny. This year, who knows what it will be? But as you can sort of see in front of you, there's 100 new inspectors. For comparison, last year HMRC were employing 70 people to investigate claims. So they've more than doubled the team of people that are doing that. So, the other things that are in front of you are happening as well. People are getting nudge letters from HMRC telling them that, make sure that your upcoming claim adheres to the scheme. a lot more random inquiries, which is something we have definitely seen. The example I gave earlier about the sort of this tech unicorn that I'd spoken to earlier this week, they much of the reason why they probably got inquired was just because they were a business that had grown to be so big. They've been self-filing for 6-7 years. When they begun filing, I think they would have been worth a fraction. Maybe even they were sort of a 50-100 million pound valued business. They're now 1 or 2 billion pounds, and that is bound to draw attention from HMRC, because for the very reason that often people get involved in that, and next thing you know, they've got a claim that's too big and complex for their internal resources to handle. And yeah, we've just seen it far more often. I think we're getting a lot of people, and especially partners, bringing some of their clients to us and saying they've got an inquiry from HMRC. Can you guys help out? And we can get involved. It's a very different process to one than when we've actually been involved from the start, because it is just very time consuming. A report's been compiled and submitted, and suddenly you're having to try and go back through it with a fine tooth comb to work out where the issue is from HMRC and make sure that the claim is legitimate. It's best to just avoid it. It's very time consuming and yeah. But HMRC, along with the nudge letters, there's going to be looking at that PAYE cap going forward from now as well. So the PAYE cap basically caps the claim size at 3 times your internal PAYE cost for SMEs. Sorry, I'm struggling to get one out. So basically what that means is that if you have £100,000 worth of salaried employees, you cannot claim back more than £300,000, regardless of how many subcontractors you are paying. So whatever your total salaried employees is, it's 3 times that is the limit of what you'll be able to claim back. The first 20,000 is actually excluded, which is to help small companies. If you're a very early stage startup and you're the director of business, you're not paying yourself a salary, you've paid a bunch of devs 15-20 grand in total to do the work for you, you're still able to claim that back. It would be pretty ridiculous if you were, you said, oh, I haven't paid a salary, and well, you can't claim anything. So yeah, that first 20,000, a bit like the tax-free allowance with salaries, is sort of allowed for those on the smaller scale. So how do you go about choosing an R&D advisor? I mean, it's important to pick an advisor who knows what they're doing to optimize your claim, to avoid inquiries. As I mentioned earlier, shameless Empower plug here, but HMRC and the Chartered Institute of Taxation pulled up 4 companies to drive best practice. Obviously, we are one of them. The other 3 are Deloitte, Forrest Brown, and Cooper Parry's. We're helping drive what best practices in this sector. And, I alluded it to earlier, but there are a lot of what I would describe as almost cowboys in the sector who will do a pretty bad job for you, and they will charge you a lot of money for it. It's less prevalent now because I think knowledge around the scheme and transparency is much greater. But, go back 10 years when the scheme was a bit more opaque, people were charging absurd amounts of money and doing a really poor job. So, it's very important to make sure you choose the right advisor. We've sort of put together what we believe to be sort of credibility indicators for choosing an advisor. And first and foremost on that list is price. An acceptable market rate is about 10%, ideally less. The industry average a few years back used to be about 20 to 30% of that claim size. And that, again, was just because it was an opaque scheme. If you have no idea how to submit an R&D tax claim, and you get a call from someone who's telling you, the government owe you 100 grand, but it's going to cost you 30 grand to get your hands on it, you're making a judgment call in your head of, well, am I going to get 30 grand or am I going to get nothing? Sorry, am I going to get 70 grand? Sorry, am I going to get nothing? And to be honest with you, a lot of people just thought it's worth the 30% to do that. It's not a good deal. I mean, our pricing sits at a maximum of 5%. For larger claims, so anything above the sort of 150, 200K mark, that actually tempers down. And, some of our very largest claims are able to offer fees of around 1%, maybe even below that. So, that's where we think is a sort of a fair marker. Over 10 or 15% is really not a very good deal. 10% or less is what I would adjudge to be reasonable. Some providers charge flat fees, which give you certainty on cost. But they do de-incentivize them slightly to optimize that claim, because if someone knows that, regardless of whether your claim comes out at 500,000 or 450 or 550, they're still going to get the same fee. They're incentivized to just make sure that claim is compliant, that you're not going to get queried by HMRC. They're not incentivized to actually try and push that forward and make sure that you are optimizing it. I'm wary of the model. We've worked with companies in the past who have come to us and shown us prior years claims, and we've actually resubmitted for them and increased that claim by 1 to even so I think our biggest one was about 290% increase with actually Bloom and Wild, you may have heard of. that happens because, you know, you've used an advisor in the past who just frankly hasn't, you know, they charge you a set fee. They don't really care how big your claim is. You know, as long as you've signed the document to go with them, they're really quite happy to just let things go. So yeah, always, I mean, I'd always recommend going for a company that charges a sort of percentage fee. You should also work with companies with strong Trustpilot reviews, ones that can provide client references. We're very big on having lots of client references. You know, if you go on our website, if you ever, you know, go and jump on something like this with someone like me, or have a sort of demo call, one of us, we're always really keen to sort of talk to you about other companies in your space or sector, or similar businesses who we've worked with and how it's worked for them. You know, we think we have a pretty strong brand, and you know, most of the people that use us come back and use us again. You should also make sure to investigate companies' key metrics. So that's their success rate. You know, are they, you know, we have 100% success rate, some other companies do. Are they being transparent about whether they do or don't? Have they had any HMRC inquiries? What do they do if there is an inquiry from HMRC? Are they going to charge you any extra for that? You know, do they provide support in that case? That's really important to know. And a lot of people they sign up and they jump in with a provider, and then, you know, when something goes wrong, they suddenly realize that these boxes weren't ticked. And it can be an incredibly frustrating process if that does happen. Make sure they're happy to work with your accountants, and, you know, share your claim report with you as well after everything's done. You know, some companies can be reluctant to do that. One of the reasons being that if you get a claim report, you can send it through to someone like me who can tell you, yeah, this is pretty good. I think it's similar to what we would have done, or can tell you, I think that's really bad, and, you know, it might be worthwhile having a chat with us. Most importantly, do not sign up to companies with multi-year deals, would be my advice. I mean, not just in the case of the R&D, I think in any case, in any business relationship you're signing up to with a provider to provide you with anything, if you haven't experienced them before, if you don't know about the job they're going to do for you, if you have no idea what the end product's going to look like, leave yourself the freedom to change provider. We work on a 1-year contract. We trust that the level of service we provide is good enough that people are going to want to come back to us year on year. They're going to want to use us again. We talk to people all the time that are in the second year of like a 3-year deal, and they're just like, you know, the company did such a bad job last year. I desperately want to get out. I don't know what my, you know, what my rights are here. We try and help people in those situations, but ultimately, you know, you should just try and avoid them in the first place. If a company's trying to lock you in for 3 years before they've even, you know, demonstrated what they can actually do, it's normally not a very good sign. So a little bit about us here at Empowered, and, you know, how can we help? We believe we're sort of pioneering the switch to R&D claims being a mixture of technical experts to write your claim and a data platform to collect your data and help sort of minimize the time spent. Our platform gives us, you know, not only I'm going to go in a bit more detail about why the platform's so good for you as the business using it, but what it does for us is it actually gives us thousands of anonymized data points that we can use for benchmarking. So when a client in a particular industry comes to us, we confidently know what HMRC to consider to be a compliant claim for a company of that size in that space. And also we know how to optimize it because we know from previous submissions, from previous conversations with HMRC, we've got all these data points to demonstrate it. I gave you the example earlier of speaking to that unicorn in the insurance insurtech space. We already work with 2 companies in the insurtech space, 2 sizable companies in the insurtech space. We've got another one that we think is soon to come across the line, and obviously I'm fingers crossed that this unicorn also wants to use us as well. It'll be fantastic for us. But the point being is that part of the initial conversations is, we actually work with 2 of your peers in your space, similar sized companies, similar growth trajectories. We've already worked on claims exactly like yours is going to be. We've got the data to know exactly how to submit it correctly. Companies that do things more manually, companies that speak to, you know, will give your CTO or COO a call on the phone, they aren't able to provide that same level of service or have that same level of surety. Hence why companies like that are more likely to sort of go towards the side of safety and of compliance over actually optimizing a claim. And that's where we think this platform really changes things for us. It also saves time in the data gathering phase. You know, you can have an hour-long call with someone from one of the big 4 or an auditor or something like that. You can pay an awful lot of money for that. Or you can have 10 different people in your company spend 10 minutes each using our platform. Each one of them had some involvement in the R&D claim scheme. For those 10 people to give us that information, it's going to cost less than this person's charging for one call with someone senior in your business. The level and the granularity of detail and data that we're able to gather it's not even really comparable between the two styles of working. It also just reduces the chance of an inquiry. We get so much data. We give that to one of our ex-HMRC experts. They put that down. It's effectively, it reduces the chance of inquiry massively. We're also able to offer our platform for a full 12 months of the financial year. So, if you're a company with a complex R&D claim, you can start using our platform on day one of the financial year. You can onboard, we have companies in the fintech space, for example, who will onboard 12, 13, 20 different engineers from their team who will all use the platform in year. Maybe on a quarterly basis, they will update on the projects they've worked on. And at the end of the year, you already know what's coming in. And that comes into that sort of bottom left blue box we have there on the advanced funding. If you've used us from day one, once it gets to 6 months through the year, we can say, well, we're pretty confident your R&D claim is going to be sat around the, say the £1 million mark. Well, great, we can actually get you an advance on some of those funds early. So, if you are a growing business, if you are a startup or scale up trying to extend your runway as far as possible, you don't want to resort to VC to reduce your equity, well, use our platform. You might be able to access £1 million at 6 months early and give yourself a bit more breathing room. And so, on to who have we worked with before? We have BioMiles there, actually. That's one of our insurance clients. Simba, you may well have heard of. They are, the mattresses. I'm sure may have seen them on TV or online. Duffel, they're in the sort of travel tech space. Charlie HR, and self-explanatory, they're a HR SaaS company. Cognizant, they're a pretty sizable tech firm now that helps businesses with lead generation. StreetBees Big Data. We work with companies of various times. These are a lot of our companies that are sort of more techy, but we also work with engineering firms, we work with manufacturing businesses, work with everything in between. We have real expertise across sectors, and we've got the data. We've worked with the companies to make sure that we're confident in working with all these types of businesses. I picked a couple of clients in particular. I think Bloomin' Well, for obvious reasons. As I mentioned, when Bloomin' Well came with us, we uplifted their previous claim by 290%. So we instantly, I think they probably were pretty happy from the off, actually. But they've been using us ever since. And I think what we love to see is that the more people use us, the more interaction they have with our platform, the more people they onboard, the higher quality their claims get. And these people aren't tied in on multi-year contracts. They come back to us every year because they think we do a fantastic job. The other one is Vertical Aerospace, which I think is quite an interesting one. They are a company which makes electric aircrafts which take off and land vertically, hence the name. They're a really good one. They've been using us for, I think, 6 or 7 years since they started their first RDEC claim, and they integrate massively with the platform. Everything from the claims process through to having that advisor there. They really are. They do really sing our praises. They're a great example. We only ever sign people up to 1-year deals if someone's coming back to us 7 years on the trot. It lets you know that we're providing a level of service that they are really, really happy with. That's not to say that we're the only provider out there, but it is to say that I think we're the ones that are doing this the best. And I think price wise, and I think in terms of the platform we're offering, we really are putting things in, putting people in a good position in terms of R&D, and hopefully disrupting a space that I think most people probably don't think needs disruption. But in my opinion, those are exactly the ones that are most desperately crying out for it. So yeah, that is sort of my slide sort of done. If there's any questions that if people can't stick around for the Q&A, if there's anything that you want to ask, if there's anything, as I said earlier, regarding grants or other types of funding, and you think you could use a conversation, please reach out to us post webinar. But otherwise, feel free to ask questions now.
That's great. Thanks, Josh. And I'm going to step in and moderate for the Q&A. And I've got a couple of questions myself. So perhaps if we can go to the full view and take down the slides, that would be great, so we can see everybody who's on screen. First of all, that was incredibly comprehensive, a lot of information. Wow, very, very impressive. I was struck by your comment about, was it only 40% who are eligible actually file a claim? So I thought that was pretty remarkable, and reinforces for me why organizations like Empowered are really a critical part of this ecosystem. Please feel free. I put a comment in the section here. If you've got a question, just raise your hand or put a question in the chat, and I will pick up on it. But I've got a couple of questions to get us started. So, yeah, probably one of the questions for some of the people on the call is, it'd be great to use Empowered, but there is a cost to doing that. So can you kind of talk a little bit about the costs involved with Empowered, and also, is it possible to self-file for R&D tax credits, and how might a small company do this?
Sure, yeah. Interestingly enough, if companies come to us and they're at too early of a stage, we actually quite frequently tell them that they should consider self-filing. If your claim is going to come out at sort of below the maybe sort of 50, 40,000 pound mark, we actually say it may well be worth looking into yourself. We can't guarantee it will be fine, but claims of that sort of size, yes, you'll have to spend a bit of time putting together your claim, but actually the chance of HMRC, having an issue with it is actually quite slim. So always look into self-filing. You can sort of go onto there's lots of resources to sort of take a look at to sort of explain how that's done. On our pricing side, so we're 5% as a maximum fee. We have a £2,000 minimum fee. So if the 5% was going to end up being less than that, you do pay £2,000 as a minimum. But as mentioned, once you get above the sort of 150 to £200,000 mark, we enter a tiered, we call it enterprise pricing. So that lowers the fee as your claim gets bigger. So as I said, we can go as low as sort of 1%, even slightly below that in some cases, depending on how large your claim is. But yeah, that's pretty much the only cost associated with it. There's other things. Sometimes people ask us to do additional things that aren't necessarily directly related to the R&D tax credit, but are needed in order to do submission, which yeah, I'd be obviously happy to go into. But that's something that almost none of my clients have ever actually needed to use us for that. So there's never been an additional fee in place for that. But yeah.
Okay. That's great. Thank you. So a couple more questions coming into the chat. Thank you, Sola, for your question. Her question is, could you make a claim on a matched funded grant?
So with all types of government grants, there are things in place to restrict the amount that you'd be able to claim back on any project that you have used a grant on. In effect, I'd be more than happy. Thanks for the question, Sol. I'd be more than happy to sort of speak to you in more detail if you wanted to sort of catch up on that. I think Amy has posted my meeting link in the chat. It depends on exactly what the grant was for, what the project was for, how big it was, and during which years it happened. We work with companies all the time that make claims, and they have got projects in there that have had government grants in there, but it depends on which, what the government grant was, where it was from, and which, how many projects did you work on the year, how many were directly related to that grant, how many were completely outside of it. So yeah, the answer is yes, maybe. But I'd be able to go into a bit more detail about, if we potentially could speak in more detail afterwards, it'd be great.
Okay, thank you. And then Rose, thank you. Rose has a question here. Does the claimant need to get more than one quote for development? And also, can a project be completed before the claim?
So sorry, to answer it in reverse, the project can be completed before the claim, as long as it's within the financial year. I mean, what we often find is you'll see companies that have projects that last 3, 4, 5 years, and every single year they're claiming on that same project, but there's never been a completion on it. It's just been effectively the same project sort of over and over. You have sort of completed a challenge associated with that project, but actually that challenge was just one step on the line of a project that has effectively been ongoing. It's not the same project, but it is effectively it's different steps of sort of one project in a way. So yes, it doesn't matter if it completes. That's even better, because you can make a much more sort of directed claim, and it makes the claim report a lot easier to do. When you say, does the claimant need to get more than one quote for development, are you talking about a quote for sort of a developer in-house, or a quote from the other side from an advisor? I'm not too sure of that. I don't know if you'd be able to clarify on that first point.
Rose, are you able to come off mute and just clarify that second question?
Yeah, sorry. Yeah, it's basically if I'm providing the services for a company, do they have to get to show the R&D, for the R&D claim, do they have to get more than one? Do they have to get 3 quotes, or can they just accept 1 quote?
No, not at all, not at all. There's yeah, you wouldn't have to go into that level of detail when submitting. I mean, you've used someone externally, you've spent money on R&D for a subcontract, and that's just that. It doesn't. There's no need to have considered more than one. You don't need to evidence that either.
Lovely, thank you. And how long does it take from when you start the claim?
Sorry, from when you actually start putting the claim together, or from when you submit it to HMRC?
Submit it, sorry.
So normally you get paid within 28 days.
28, right.
Yeah, that's what HMRC sort of advertise that they will do. However, in busy periods, so especially towards like December, January time, a lot of companies file their R&D claims there. It can take longer. And obviously, if there are any issues with it, e.g. if HMRC have to sort of query or ask any questions about it, that will delay it beyond that 28 days almost certainly.
Yeah.
And can you claim before the project is done?
Yes, so you can. Yeah, that's still R&D spend. You just have to outline what it was that you worked on. What were the challenges there? What challenges did you overcome in the process so far? What is still left to do, etc.
Lovely. Okay, thank you.
Very good questions, Rose. Thank you. I just wanted to build on that point about timing, because I became a huge fan of these credits last year when we went into the pandemic. And, for me, there were so many startups that were struggling from a cash flow perspective. And we encouraged many, many startups, if they could, to apply for R&D tax credits. But Josh, one of the things that I had heard from a number of people is that it took, maybe somewhere between 3 to 4 months to actually receive the cash. And, I remember through our Save Our Startups campaign, we were really pressuring the government to say, can you add more resources? We're going to lose a whole bunch of small businesses and startups if it's taking 3 to 4 months to get payment. So it sounds like that payment cycle has been reduced, but I'm a little bit weary given what I saw last year, and it'd be good to just get maybe some added insight from you on that. And are there messages that you convey to HMRC if you're hearing it taking 3 to 4 months to receive the cash?
Absolutely, yeah, absolutely. I mean, it's something that I think of, especially for those of us on various committees, etc., with HMRC, it's something that we would definitely have relayed last year. I think the unfortunate thing is that HMRC want to make sure that the burden is obviously on making sure that these tax credits get through to people, and they need to make sure it comes as quickly as possible. I think in times such as last year, when there was probably a much higher influx of these claims than maybe typically, there's a lot of companies that claimed for the first time last year because in the sort of mad dash to try and make sure they could extend their runway and survive COVID, a lot came through. HMRC now have come out and said 28 days is our target. This is what we're doing. We beefed up the team. As I mentioned during the webinar, I think at times when things do get very, very heavy, and it is normally at that sort of tail end of the year time, that can slightly slow down. But actually what we've seen, certainly with my clients over the last sort of 3-4 months, we've seen very, very prompt payments coming through from HMRC. So it seems like they have addressed that to a certain extent. I mean, fingers crossed. I suppose the proof is in the pudding, and if we're getting a lot of if we're getting a lot of queries about that, then obviously it's something that we relay back. But it's one of the reasons why actually last year we started talking about advanced funding actually, and we actually started partnering with a few lenders to provide that for people. And obviously I spoke about it in terms of being able to get an advance 6 months ahead of time, but actually you can get an advance, you can submit it and just say, what, I'm happy to pay a small haircut on a monthly basis until the money comes through from HMRC to access it. And that's one of the advantages of using our platform. And we have a handful of lending partners who are willing to sort of advance those funds. And obviously it's something that that some businesses we come to do actually use it. And I mean, especially if you're an early stage startup, and I think last year's a really good example, but I talked to companies even this year who are sort of like, we're rapidly growing, we need this cash in, when can we access it? Some of them want to do a 6-month advance. Some of them are sort of like, okay, well, I'm going to file this in maybe 2-3 months time. I actually would rather have it today. And we can work on them on that basis too. So if it's something that, if anyone listening or, if anyone speaks to anyone that could potentially benefit from that, we're always really eager to talk about advanced funding with people.
That's great. That's great. I had one more question, and just a reminder for anybody, if you have a question, feel free to just put a message in the chat. But one question I have is, a lot of the small businesses and startup firms I work with, they have an accountant or small accountancy firm that they use. And when I've spoken to people about this, well, I'll just give this to my accountant to take a look at. So where do you differ or what would you say to somebody who's saying, well, I'm just going to hand this over to my accountant? What's your upside here by coming to you versus just working with the accountant who's already doing your financials anyway?
Yeah, absolutely. I think for us, there's a lot of businesses who actually effectively outgrow having the accountants file for them.
Mm-hmm.
I obviously mentioned that I'd had a few partners in particular actually pass us forward leads where people had gotten inquiries, and actually we work with a private equity firm. One of their clients had been queried. They'd been using their accountants to file for years. It just happened that their accountants weren't R&D specialists, and actually, while they were doing what they thought was quite a compliant claim, the business had grown to a point where actually they basically face the same issue that they might have had if they're doing it internally. I think the other side with accountants that we normally find is that most accountants won't actually self-describe themselves as R&D experts. I think if you're looking at a larger firm, auditors, etc., they will. With us, by using our platform, you're getting that sort of top level expertise. And I don't want to talk down the way that other firms work. But with a lot of the bigger firms, a lot of the sort of specialty professional services firms, you'll have an initial conversation with someone quite high up, and actually the person you'll be speaking to for the vast majority of the process will be someone quite junior. Whereas with us, you have our platform for data collection, which means you're not having to spend a lot of time on the phone to people, which with other companies they may well be charging you for that. Then all that data you give us gets transferred across to an ex-HMRC expert, someone that used to work at HMRC that understands exactly what needs to go into these reports. So you can be guaranteed that the claim is the best it is at. What we often say to people is, we understand you're happy with your accountant firm, and I would never sit here and tell someone that an accounting firm I've never spoken to doesn't know what they're doing. So what I normally say is give us, get your last claim report from them, send it across, let us take a look at it. If it's good, I will tell you this is a perfectly fine claim. I don't know that we could do better than this. There's other reasons you may want to use us, but the claim quality is good. It's worth knowing. And I think, the Bloom and Wild example is probably quite a good one. They were using a specialist firm, and actually, while they didn't know they weren't getting a good level of service, I think they had an inkling perhaps, and they thought it might be worthwhile looking at our options just to check. I don't think in their wildest dreams they thought they were going to triple the size of their claim. But that's what can happen. Some people, it's not a case of being bad at your job. It's just, we're doing this day in, day out. This is our absolute bread and butter. So, your accountancy firm, this probably isn't, something that they're not going to be well-renowned experts in. Is going to be, the other service they provide most probably. So it's worth just seeing what the other options are out there.
Thank you. Well, I don't think we have any other questions at this point. Josh, you are a font of knowledge about R&D tax credits. I've learned an enormous amount over the past 50 minutes. So thank you for that. For everybody on the call, Empowered, great organization, 800 customers, 100% success rate, 0% claims reduced by HMRC. I'm not sure many organizations can make that claim. Tech London Advocates is delighted to be working with you on this webinar. So thank you. And just let me hand back over to you for any final comments before we close.
Fantastic. Yeah, I mean, as I mentioned, if there is anything that anyone wants to discuss with us, if there's anything that actually you didn't get the opportunity to say, and you would quite like a confidential conversation around anything, please reach out to us, get in touch. I think Amy Law sent my meeting link through to everyone on the chat, so give that a click and put some time in my diary if you'd like to have a chat. Otherwise, feel free to reach out to us on anything. We often have conversations with really early stage businesses who maybe won't even be claiming for a year or two, but we're more than happy to sit there and talk you through how we set things up, even if the end of the conversation is me saying you should definitely self-file for this current year, but please let's have a conversation in a year's time. So
great. Thank you very much. Thanks everyone for joining us, and sign up to work with Empowered. You've got some great resources at your disposal. So thank you, and let's do it again at some point.
Thanks very much, guys.
Thank you. Bye, everyone.